Let's talk a little bit, Joel, about what you think would happen in a second Trump administration. What changes? How do you think the economy works in that version of the world versus a Biden version of the world?
Well, I think it's a very stark contrast between the two. And former Vice President Biden has been very clear about what he intends to do. And that includes rolling back much of the tax reductions on businesses that have spurred an increase in capital investment, and that longer term will increase productivity, which will increase the standard of living for every sector.
Joel, can I ask you a serious question? Because I hear people say this on TV all the time, and it makes no sense to me because it's not true. There was a small increase in CapEx when the Trump administration came into office. Maybe you could argue it was the initial results of the tax cuts. But as you know, and you can go look at the math, you can go on the St. Louis Fed site that shows CapEx went down. CapEx went down during this period. Why do you come on and say that it went up?
Well, following the tax cuts, after those were enacted, we actually did see, as you just referenced, we saw an increase in capital expenditures in that investment component. Now, we had a few other developments in here. We also saw a lot of trade friction. Much of that was needless. There's no one solution to economic growth. We need to have free trade, and we need to have lower taxes, and we need to have those other incentives in place. So, yes, we saw the initial increase in CapEx, which does have a long-term increase on productivity. At the same time, we took a few steps backwards on trade. So in the next administration, if that is President Trump, we need to see a continuation of the tax policies that began to set us on a better long-term footing. At the same time, we need to see increased business certainty. Our businesses need to know, and our investors here at home and abroad need to know, that we are open for trade and that we are going to try to expand free trade across the globe. Now, Vice President Biden, on the other hand, he has talked about his energy plan, which is pretty much a Green New Deal light. We know that that will have an impact on average families. We know that the Green New Deal cost would be $7,000 per year. That would make us looking a lot more like parts of Europe, which have far less disposable income per family because energy costs are so much higher.
Right. Stephanie, let me come to you on this with the tax issue, which is that Biden, and Biden said it in our interview right here on Squawk Box a couple months ago, said even if we're in the midst effectively of the pandemic, because I pushed him on this, would you raise taxes? Meaning if you're trying to create a recovery, would you raise taxes in the midst of it? And his answer was yes. Do you think that's right?
Look, I think that I probably have a pretty different opinion. For me right now, I think I would be looking more for something analogous to what Chairman Powell has told us that he is going to do with respect to monetary policy. When Chairman Powell said we're not even thinking about raising interest rates, you know, the sort of fiscal analog to that would be we're not even thinking about raising taxes, as you say, in the midst of a pandemic. But I got to say, you know, the compulsion to increase taxes is really driven by concerns about doing anything that adds to the deficit. And I think that's what happens. Politicians want to try to pay for their program. Democrats seem to want to hold themselves to a different and they think higher standard than their Republican counterparts, in the sense that, you know, they want to try to show that they can accomplish their agenda without adding to the deficit. And I think that's what gets behind a lot of this sort of stuff. So, no, I have a different opinion, but I understand, I think, the politics that drive Vice President Biden to say, listen, we can afford to do the kinds of things that I'm talking about, the agenda that I'm pushing.
But Stephanie, if he were to raise taxes in the middle of all of this, do you ultimately believe that would be bad for the economy?
Well, it depends what those tax increases are. I mean, you sort of just said the tax cuts didn't lead to the economic miracle. They didn't produce the windfall that led to lots of job creation and CapEx and all that sort of thing. Right. So if that's true, and it is, then it seems to me that rolling back tax cuts that weren't all that helpful in the first place don't do much harm. So that's my answer.
Right. Okay. And then finally, real quick, Joel, in terms of the confidence that people have in the economy, how much do you just look at leadership broadly? And I think it's hard to look at what's happened during this pandemic as a great exemplar of leadership. in terms of what it's actually meant for the economy. In large part, you could say it's actually, because of the approach by the administration, it's actually prolonged the economic agony, maybe not from the markets, but for the actual economy.
In the actual economy is over the past few months, we've had 3 records jobs gains, and that's because we see many states and many communities actually reopening. There's a divergence here across the country. If you look at New York and Chicago versus places such as Georgia and Missouri and even parts of Ohio that are reopening, you see a big difference here. We see people coming back to work. We see people returning to the stores.
So you think this has been handled wonderfully?
So I think going forward, that's what we're going to see play out.
Okay. We want to thank you both for being with us. Squawk returns on the other side of this break with 2 big hours ahead.